listeners. In this lesson, we're going to look at the published financial statement of a single company. So, a complete set of published financial statement will include statement of financial position, statements of profit or loss and other comprehensive income, statement of changes in equity, statement of cash flow, statement of value, statement of uh, and it will also include the accounting policy and the note to the accounts. Today's lesson, we're going to look at the statement of profit or loss and other comprehensive income for the year ended. It has a format. We're going to start with the revenue. The heading first, statements. Heading is very important. Statement of profits and loss, profit or loss, and other comprehensive income for the year ended 31st December year 20XX. That will be the heading. It's very important. Then you have your currency sign here. Our currency sign here is in Naira. The first item will be revenue. Revenue. Bring you the figure for your revenue. Then you less your costs of sales. Cost of sales, which will be in brackets. And whatever you have will be your gross profits. Gross profits. You bring in other income in case you have other income coming to the company, other income. You add it. Then you less your distribution costs. Less it, so it will be in brackets. You also less your admin expenses. Administrative expenses, it will be in brackets because we are going to less it. If you have other expenses, you less it. You less it. Then in case we have finance costs, you also less it to be in brackets. Whatever you have, the total after adding and lessing all the expenses, you have what we call profits before tax. Profit before tax. Then if we have any income tax, you less it. Less to be in brackets. Whatever you have will be our profit for the year. Profits for the year. Then in case the company has other comprehensive income, you bring it in. Other comprehensive income. You bring it in. We have so many other comprehensive income, but we're going to have examples such as gain on property revaluation. Gain on property revaluation, you add it. Whatever you have will be your total comprehensive income. Total comprehensive income, which will be attributed to the parents and other non interest holders. Then we are going to have workings for revenue, workings note 1, workings for cost of sales, working notes 1, 2. And then in case we also have other workings, we're going to have them under our notes and our workings. You do the working there and bring it here. For the revenue, in case you have the total revenue for the year, you less whatever, maybe if you have return inward, you less it to gain your revenue. Then the cost of sales, you have opening inventory to calculate your cost of sales. You have opening inventory for the period. Bring in your naira sign. You add rather purchases for the period. Add it up. It will give you the cost of sales available. Then if you have closing inventory, you less it, and that will give you the cost of sales. So this will bring us to the end of our class for today. Thank you.